Happy New Year, everyone. I hope you're doing well today. We're going to take a look at the stock MIN. Now, I recorded this on the 30th of the 12th, 2020, so right between New Year's and Christmas. So I was umming and ahhing about actually uploading this one because the liquidity is so low, the volatility is pretty average, and ultimately it's not the most exciting P&L porn thing out there. But I thought, you know what, the most important thing is the tape reading setup, right? It's all about the order book. And I think that's still worth pointing out and mentioning and just paying attention to. Now, MIN was matching at 36.89 early in the morning, and it kind of stayed there. And we've got exactly a minute 30 before open. And just pay attention to the order book in this minute and 30. Now, on the daily chart, it was breaking out to the upside. It looked really good. I was actually considering a long until I saw the order book. You can see the walls at 36.99 and 3700. I was interested in getting in front of that wall. But you can see sellers are starting to pile in. And just pay attention to the liquidity and who's stacking what side of the book. Pay attention to both the bid and the ask and look at the green versus red. Right? Green means people are adding onto the position. There are new positions added. Red means there are positions deducted. So you can see sellers are stepping up right before open. We've got exactly 40 seconds from now till this stock opens up. The match price has dropped from 36.90 to 36.65. Sellers are piling in. And the most important thing to pay attention to is the order book when it opens. When it opens at 36.50, and ask yourself, put yourself in both the seller and the buyer's shoes. What would you rather be, the buyer or the seller on match? Now pay attention to what happens and where the risk is, basically. So I'm shorting here 500 shares. It's a very small position, but again, liquidity is very low here. You can see almost instantly when it opens here, there's 10 pips of risk if you went long, and there's 1 pip of risk if you went short. And you can see sellers are stepping up. We've got 36.50, a little bit of a wall there. I wouldn't really call it a wall, but in this low liquid environment, you may as well call it a wall. So 36.50, 36.49, 36.47, these sellers are stepping up. And what about the buy side? There's 100 shares all the way down to what, 36.17? So if you're a buyer, you'd be freaking out and probably selling right now because you have zero support. There is zero indication that going long here is even remotely a good thing. Now, I had a lot of people ask me in my previous video of, well, how do you know short was the most profitable thing to do? And the answer there is you don't know. Nobody knows what happens on open. That's why the idea of the order book or the setup of the order book is to get the least amount of risk and maximize the reward. So if this position went against us, we might have had about 1 to 5 ticks of risk. And on the buy side, there was just nothing there. There was like, what, 20 pips of profit? It was 10 pips immediately of profit, but it looked like there was going to be 20, 30, 40 pips of profit. So that risk to reward is really healthy. Now, here's the issue with liquidity, and this is exactly why I took a small position. 36.03 is where I'm going to put my buy order. So I'm going to close out my short at 36.03 in a minute. I'm going to put in my 500 shares. And this is where the constraints are obvious. I ended up getting half filled at maybe about 249 shares. I ended up closing out, and you'll see it in the securities tab on the left-hand side. And unfortunately, I was a little bit slow on closing out this short. So you'll see I get jumped in front of. There'll be some orders at 36.04, 36.05 in any second now. And once that happens, I was a little bit too slow to amend my order and close out at 36.13, 36.12. So I end up actually closing out at around 36.25, 36.26 with my remaining 251 shares. So that's about $2.50 per tick times about 23. So losing just under $50 worth of profit because of the liquidity constraints. So once that momentum stopped, you can see exactly why you don't want to trade in larger parcels. I think that was about maybe $1,300 in margin. So that was a really small position. But you can see what happens if you had 1,000 shares there, you'd be freaking out trying to bail out of that position. And just the slippage is insane as well. So during that low liquidity period, it's just worth sizing down. I was just trading over the holiday period in a small size because there's no real alternative during that holiday period. So hopefully things will kick into gear in January. That things step up, liquidity steps up, hopefully within the first couple of weeks of January. So I'll try and upload more content there. But I still think that order book setup is very relevant. You saw the sellers piling in the final minute. You could see the buyers just didn't really exist. And once the stock opened, you also saw the risk to reward and which side was better, whether you went short or whether we went long. Now, it might happen a little bit too quickly. It might take some time to adjust, but ultimately, it's all about minimizing risk, maximizing reward. It's not about guessing which way it's going, right? Whether you're right or wrong actually doesn't matter. What matters is that when you're wrong, you close out for as little risk as possible, that you lose as little as possible, and you maximize your return based on the order book setup. And that's pretty much it, guys. Don't take that as financial advice. This is just an educational piece on what I see in the order book. All right, thanks, guys, and have a happy new year.